$115. That is where silver is trading right now. It is pumping insanely, like you've never seen before. I called a mega bullish silver move yesterday, and today it has gone absolutely parabolic. 12 months ago, it was $30. That is a 270% gain in 1 year. Bitcoin did not do that. Tesla did not do that. Nvidia did not do that. The S&P 500 definitely did not do that. Silver did that. And I am about to show you why this might just be the beginning of something much, much bigger. Because at 9 a.m. this morning, while you were starting your day, the Federal Reserve quietly injected $8.3 billion into the financial system, created out of thin air, with a few keystrokes on a computer, not earned, not borrowed, not saved from anywhere, created from nothing, like magic. Except it is not magic. It is monetary policy, and it affects every single dollar you own. And here is what nobody on CNBC will tell you. What Bloomberg will not explain: every single dollar the Fed creates is rocket fuel for silver, not some of it, not a little bit, every single dollar. And they just announced they're going to create $540 billion more this year alone. That is not my prediction. That is not speculation. That is their published policy sitting right there on the New York Fed website for anyone to read. In the next 30 minutes, I'm going to break down exactly what is happening, why the biggest names in finance are quietly positioning in precious metals, and why the next 90 days might be the most important financial window of your lifetime. I am going to show you a price target that made me stop and stare at my screen. It comes from one of the most respected analysts on Wall Street, and when you see the math behind it, you will understand why I had to make this video today. But first, let me show you what happened this morning that has massive implications for silver. Welcome to the Hidden Economy. I break down the money moves that mainstream media misses completely. Subscribe and drop the word silver to the moon in the comments. And let's get into it. January 26th, 2026, 9 a.m. Eastern Time. The Federal Reserve Bank of New York executed what they call a Treasury bill purchase operation, $8.304 billion. Started at 9 a.m., finished by 9:20 a.m. 20 minutes, $8 billion, created from absolutely nothing, injected into the financial system. Now, most people hear that and think, okay, boring Fed stuff, who cares? Let me scroll to the next video. But that reaction is exactly why most people stay poor. Because if you understand what this actually means for silver, you would not be scrolling. You would be paying very close attention. Here is why this matters so much. This is not a one-time thing. This is the third injection since January 20th. And it is part of something much bigger that the Fed announced in December. Something they buried in boring technical language, hoping nobody would pay attention. They are calling it reserve management purchases. Sounds like accounting paperwork, right? Sounds like something that would put you to sleep faster than an economics lecture. That is intentional. Because what reserve management purchases actually means when you strip away the jargon is this. The Federal Reserve is now creating $45 billion in fresh new money every single month throughout all of 2026. Bank of America confirmed this exact number in an analyst report last week. $45 billion per month. Now let me do the math for you. $45 billion per month times 12 months equals $540 billion. Over $500 billion of fresh money flooding into the system this year alone. But here is where it gets absolutely wild. This is not headline news on CNBC. This is not trending on Twitter. This is not being discussed on any mainstream financial show. Most financial advisors you talk to have never even heard of reserve management purchases. They have no idea this is happening. But you know who has heard of it. Ray Dalio, the founder of Bridgewater Associates, the largest hedge fund in the world, managing over $150 billion. He has been accumulating gold and hard assets for years, publicly telling anyone who will listen. Stanley Druckenmiller, widely considered one of the greatest traders in the history of financial markets, made billions with George Soros breaking the Bank of England. He has been publicly bullish on hard assets and warning about currency debasement. Jamie Dimon, the CEO of JP Morgan Chase, the most powerful banker in America, the guy who has spent his entire 50-year career in the dollar system. He just said something remarkable in an interview that should make everyone pay attention. For the first time in my career, investing in gold is becoming rational. Jamie Dimon, 50 years on Wall Street. For the first time, saying gold makes sense. When billionaires who have spent their entire lives building wealth in dollar-denominated assets suddenly start buying hard money, what exactly do they know that you do not know? I will tell you exactly what they know. They understand the math. And the math is absolutely screaming right now. Here's your first major insight, and I really need you to let this sink in. Because it changes everything. Between December 2005 and December 2025, the Federal Reserve balance sheet went from $800 billion to $6.5 trillion. Let me say those numbers again, because they are so big they almost lose meaning. $800 billion to $6.5 trillion. That is an 800% increase in just 20 years. The Federal Reserve now controls assets equal to more than 20% of the entire American economy. One institution, unelected officials, controlling over 1/5 of the largest economy on Earth. Now here is the question that matters. What happened to silver during that exact same 20-year period? In 2005, silver was trading around $7 an ounce. It was boring. Nobody cared about it. Financial advisors told people to ignore it. Today, silver is $115. That is a 1,500% gain. Silver did not just keep pace with money printing. It did not just match it. Silver dramatically outperformed money creation by almost double. More Fed, money creation, higher silver prices. The correlation is undeniable if you actually look at the charts, and the Fed just explicitly told us they are creating another $540 billion this year. What do you think happens to silver? But wait, here's where it gets even better for anyone who is bullish on silver. Let me tell you something that happened last week that made this whole situation very real and very personal for me. I talked to a coin dealer who has been in the precious metals business for over 30 years. This guy has seen everything. He was there during the 2008 financial crisis when everyone was panicking. He saw the 2011 silver spike when it ran to $50. He witnessed the COVID crash and recovery. 30 years of experience. Seen every market condition imaginable. He told me something that stopped me cold. In December, he had customers offering 20% over the spot price just to get physical silver. Not the normal 5% premium, 20%. Customers were calling him every single day, begging him, pleading with him, willing to pay any premium. And he could not get enough silver to sell them. 30 years in the business, and he said he has absolutely never seen anything like what is happening right now. People are starting to wake up. They're starting to realize what is happening with the money supply. And they are scrambling to get positioned. Once you see this pattern, you cannot unsee it. And that brings me to your second major insight. This is where we start talking about specific price targets that might blow your mind. Do you know what the gold to silver ratio is? It is incredibly simple math. You take the current price of gold and divide it by the current price of silver. The result tells you how many ounces of silver it takes to buy one single ounce of gold. Historically, going back hundreds of years, this ratio averages around 50 to 60. Right now, with gold trading at $5,100 and silver at $115, the ratio is approximately 45 to 1. Now here is what history teaches us, and this is absolutely critical. Every single time in modern financial history, when this ratio gets stretched significantly in one direction, it violently snaps back in the other direction. And when it snaps back, silver does not just go up a little bit. Silver goes absolutely parabolic. Let me show you the historical examples. In 2010 and 2011, the gold to silver ratio crashed from about 70 all the way down to 32. During that compression move, silver went from $18 to nearly $50. That is almost a triple in about 14 months. Did people say silver was going crazy at the time? Yes. Did they call it a bubble? Yes. Did silver still nearly triple anyway? Also yes. In 2020, during the COVID crash, the ratio spiked to 125. That was the highest reading in modern recorded history. Everyone was panicking. Silver crashed all the way down to $12. People were calling it dead. Then the ratio started compressing. And silver exploded from $12 to nearly $30 in just a few months. More than a double in record time. The pattern is crystal clear if you are paying attention. When the ratio compresses, silver dramatically outperforms gold. We are in the early stages of another compression cycle right now. And here's the price target math that made me literally stop and stare at my screen. If gold stays at $5,100 and the ratio compresses to 30 to 1, which has happened multiple times, historically, silver goes to $170. That is a 52% gain from current levels. If the ratio compresses to 20 to 1, which also has historical precedent, silver goes to $255. That is a 127% gain from here. But wait, those calculations assume gold just stays flat and does not move at all. What if gold keeps going up too? JP Morgan just raised their official gold price target to $5,500 by year-end 2026. Yardeni Research, one of the most respected independent research firms, is calling for $6,000 gold. Let us run those numbers. If gold hits $6,000 and the ratio compresses to 30 to 1, silver goes to $200. If gold hits $6,000 and the ratio compresses to 20 to 1, silver goes to $300. $300 silver from 115 today. That is a 168% gain. That is not fantasy. That is not hopium. That is basic math based on historical patterns that have played out multiple times in living memory. Now, I am going to say something that might make some of you watching this uncomfortable or even angry. If you're keeping more than 3 months of expenses sitting in a savings account earning 4% while silver delivers 270% returns, you're not being conservative. You're not being safe. You're volunteering to get poor slowly. There. I said it. Your savings account is not protecting your wealth. It is a slow bleed. Inflation is running higher than whatever interest rate your bank pays you. Your purchasing power, your ability to buy real things, is shrinking every single month you keep your money there. Meanwhile, silver holders sat back and watched their purchasing power nearly triple in just 12 months. Now, I'm not saying dump everything into silver. That would be crazy and irresponsible. But having zero exposure to hard assets while the Fed prints $540 billion, that is also crazy. Look at what is happening and make your own informed decision. Now, let me show you what is happening in the physical silver market, because this is where it gets really, really wild. Here is your third major insight. Do not just believe me on this one. I actually want you to verify it yourself. Pause this video right now. Open a new tab on your browser. Type in COMEX Silver Inventory Chart 2026. Look at what comes up. I will wait. Did you see that cliff? That straight line going down? In June of 2025, COMEX had 86 million ounces of registered silver sitting in their vaults ready for delivery. Today, that number is 28.4 million ounces. That is 67% gone in just 7 months. More than 2/3 of the deliverable silver in America, main precious metals exchange, has vanished. But here's where it gets really crazy. While the physical silver was disappearing from the vaults, the paper contracts stayed exactly the same. There are currently 935 million ounces worth of paper silver claims on COMEX right now. 935 million ounces of paper. 28 million ounces of real metal. That is 33 paper claims for every single real ounce of silver. 33 people think they own the same ounce. Now, let me put that in terms that actually make sense. Imagine a concert venue that sold 33 tickets for every single seat in the building. What happens when everyone shows up expecting to sit down? Absolute chaos. People demanding refunds, lawsuits, accusations of fraud. That is the silver market right now. A massively overbooked venue pretending everything is completely fine. And here is the thing that should have every silver bull absolutely fired up. Silver lease rates just spiked to 8%. If you do not know what lease rates mean, let me explain it simply. Lease rates are what industrial companies and short sellers pay to borrow physical silver temporarily. They need silver for their manufacturing processes or trading strategies, so they borrow it and pay a fee. Normally, this fee is basically nothing, 0.5%, maybe 1%. Boring low numbers that nobody pays attention to, but 8%. 8% has not happened since the 1970s. Over 50 years ago, what does an 8% lease rate actually tell you? It tells you that industrial users are desperate for physical silver right now, so desperate that they are willing to pay 8% per year just to borrow it temporarily because they cannot find enough to buy outright. Would you pay 8% interest to borrow something if you could easily just go buy it? Of course not. That would be insane. You would only pay that premium if you were absolutely desperate, if you needed it immediately. If you could not find it anywhere else at any price, that is where we are right now. And here is what history shows us. Every single previous spike in silver lease rates has preceded a major move higher in silver prices. Every single time. Lease rates spiked before the run to $50 in 2011. Lease rates spiked before the move from 12 to 30 in 2020. And lease rates are spiking right now to 50-year highs. This indicator is flashing bright green for silver bulls. But here is where it gets even crazier. Physical silver in Shanghai, China is now trading at a $6 to $9 premium over the official COMEX paper price. Think about what that actually means. If you want to buy real actual physical silver in China right now, you have to pay $6 to $9 more per ounce than what the futures market says silver is worth. That is nearly a 10% premium just to get your hands on actual metal. The paper market says silver is worth $115. The physical market says it is worth $121. Which price is real? I would argue the physical price is the real price. The paper price is becoming a fiction. And historically, when physical premiums explode like this, the paper price eventually has to catch up. Because at some point, enough people realize the paper price is fake. And a massive violent repricing happens almost overnight. This exact dynamic played out in the nickel market in 2022. The paper price of nickel was trading around $20,000 per ton. Everything looked completely normal on the futures exchange, business as usual. Then physical supply got tight, really tight. And in a matter of days, not weeks, not months, days, nickel exploded from $20,000 to over $100,000 per ton. A 5 times move in just a few days. The London Metal Exchange had to literally halt all trading and cancel billions of dollars worth of legitimate trades because the system completely broke. Could something similar happen in silver? Nobody knows for certain. Anyone who tells you they know is lying. But the setup is eerily familiar. Paper market massively overextended, physical supply extremely tight, industrial demand absolutely relentless, and the Federal Reserve printing money like there is no tomorrow. This is why smart money is accumulating physical silver right now, not paper ETFs, not futures contracts, actual metal they can hold. Because when the music stops in this game of musical chairs, only the people holding real silver will have a seat. Here's your fourth major insight, and this one is absolutely critical for understanding the supply picture. On January 1st, 2026, China dropped a bomb on the global silver market. They officially restricted silver exports. Not a complete ban, but functionally very close to it. Under the new rules, only 44 approved companies in all of China can export silver. Everyone else is completely locked out. And these 44 companies have to meet incredibly strict requirements. At least 80 tons of annual production, at least $30 million in credit lines. This instantly blocked hundreds of smaller exporters who have been supplying the Western world for decades. Now here is what you absolutely need to understand about China and silver. China does not just mine some silver. They do not just participate in the market. They control the entire global silver supply chain. China is the dominant force in silver refining. They take raw silver from mines around the world and process it into the industrial grade material that manufacturers need. They are not just a player. They are the gatekeeper, the bottleneck, the choke point. And they just decided to start closing the gate. A Chinese state newspaper quoted an industry insider saying this: "The new policy formally elevates silver from an ordinary commodity to a strategic material." Strategic material. That is the same classification China uses for rare earth minerals, the stuff that goes into missiles and fighter jets and advanced electronics. China looked at silver and made a decision. This is too important to sell freely to the West anymore. They are hoarding it, keeping it for themselves, using it as economic leverage. And guess who noticed immediately? Elon Musk, the richest person on the planet, the guy running Tesla and SpaceX and X and a dozen other companies. He posted on his platform responding to the China news and wrote, "This is not good. Silver is needed in many industrial processes." When the richest person on earth is publicly worried about silver supply, maybe that is a signal you should pay attention to. But China export restrictions are just one piece of the supply crisis. On January 14th, 2026, the United States Mint suspended sales of all silver coins. Not limited, not restricted, completely suspended. Their official reason: rapidly rising silver prices have made it impossible to accurately price products. The United States government, the entity that literally creates money out of thin air, cannot sell its own silver coins because the price is moving too fast for them to keep up. I have been studying financial markets for years, and I have never seen anything like that. And it is not just America. The Royal Mint in the United Kingdom is completely sold out of silver bullion. Their website literally says, "Email me when back in stock." Two of the most powerful governments on earth cannot supply silver to their own citizens. Does that sound like a market with plenty of supply to you? Does that sound like everything is normal and fine? Or does it sound like something massive is happening that most people are completely missing? Now let me show you the demand side of this equation, because this is where the bull case becomes completely undeniable. Silver is not just a precious metal anymore. It is not just something people put in jewelry or investment coins. Silver has quietly become the single most critical industrial metal on the entire planet. Let me walk you through the numbers. Solar panels consumed 200 million ounces of silver last year. Every single solar panel needs silver because nothing else conducts electricity as efficiently, and that number is growing exponentially. By 2028, solar silver demand is projected to hit 350 million ounces annually. That is a 75% increase in just 3 years. Electric vehicles use about 50 grams of silver per car. That is double what traditional gasoline cars use because EVs are packed with electronics that need silver. As EV production scales globally, silver demand from that sector keeps climbing. 5G cell towers need silver for the antennas and electronics. AI data centers need silver for the servers and connections. Medical devices need silver because it naturally kills bacteria. Semiconductors need silver. Basically, every electronic device you have ever owned has silver in it somewhere. Every single major technology trend of the next decade runs on silver, and here is the problem that absolutely nobody has solved. For 5 consecutive years, global silver demand has exceeded global silver supply. 5 years in a row of structural deficits. The cumulative shortage since 2021 is 820 million ounces. That is almost an entire year of global mine production that got consumed and never replaced. The World Silver Survey says 2025 had the largest supply deficit ever recorded, 295 million ounces short. We're eating into stockpiles, drawing down inventory. The buffer that used to exist is disappearing. And here's